There are several types of accounts that are commonly used to accumulate savings. The right choice for you depends on your financial goals, time horizon, risk tolerance, and tax considerations. Here are some popular savings accounts you can consider. 1. Retirement accounts. IRAs are long-term savings accounts specifically designed for retirement. If your employer offers a retirement savings plan, such as a 401, take advantage of it. Contributions to these plans are often tax deferred, meaning you don't pay taxes on the money until you withdraw it. 2. Brokerage accounts. Brokerage accounts allow you to invest in a wide range of securities, including stocks, bonds, mutual funds, and exchange-traded funds. While these accounts carry more risk compared to traditional savings accounts, they have the potential for higher returns over the long term. It's important to assess your risk tolerance and research investment options before opening a brokerage account. 3. Savings accounts. Traditional savings accounts offered by banks and credit unions are a common option for storing and accumulating savings. High-yield savings accounts are similar to traditional savings accounts but offer higher interest rates. CDs are time deposits where you agree to keep your money with a bank for a specific period. Known as the term, money market accounts are similar to savings accounts but typically offer higher interest rates. Remember to carefully consider factors such as liquidity, potential returns, fees, and tax implications when choosing the right accounts to accumulate savings. It may also be beneficial to diversify your savings across multiple accounts to meet different financial goals and optimize your overall savings strategy. Consulting with a financial advisor can provide personalized guidance based on your specific financial situation and goals.